And the president took action. Democrats took action. We passed the American Rescue Plan. And now we're in a place where we've created more than 13 million jobs. We're in a place where wages are up. Inflation is coming down. It's easing. And we have talked about Bidenomics, the president's plan, and how it's moving this country forward.
As soon as we get back in the White House, I will end the disaster known as Bidenomics, and we will once again implement the proven economic formula that puts America first. We're going to put America first. They don't put America first. And very quickly, our economy will be great again, and our country will be absolutely, like I say, fairly quickly, like never before.
All right, guys. So we have a special edition of the show today. I am joined by my friend Colin Plum from Noble Gold, the CEO of Noble Gold. I love to bring him on the show to discuss the current state of the economy. We have some new economic numbers that have come in regards to how the country is doing. And Colin here being an expert in regards to the economy, investments, the markets. I always think it's great to have a conversation with him in regards to how he feels about how things are going and what we can look forward to in regards to the economy. So I have him with me today, and we're going to talk about it. And I hope you guys find this to be informative. So without further ado, I just want to kind of lay the groundwork with some of the economic numbers that have come in recently. And then we're going to talk to Colin about it and get his thoughts on it and then kind of go from there. So as many of you guys know, inflation, the consumer price index climbed 3% in June. However, it is down significantly from peak inflation rate of 9.1% that we had back in June 2022. Now, U.S. GDP also grew at 2.3% annual rate at the end of the second quarter. However, core CPI is still inflated at 4.8%, and that measure excludes the volatile categories of food and energy. Now, some economists remain concerned, despite some of these numbers that kind of look good at face value. They're still concerned about the strong but tight labor market continuing to fuel inflation. And it seems like the Federal Reserve may kind of agree that we could still see some elevated inflation as they decided to continue to increase interest rates as they went from 5.25% to 5.5%, which is the highest level that we've had in 22 years. So my question to Colin is, what do you make about these numbers, right? Do you think that what we're seeing here is Bidenomics at play, or are we seeing more of the result of the Federal Reserve increases in interest rates? What do you think we're seeing here in general?
Well, there was a CBS study that came out actually yesterday that talked about how the American people are feeling about the economy, and 65% felt like things are not going well, which is a pretty high number considering the reported unemployment is 4%, which is, you would think would be pretty low. And like you said, inflation has been going down from its all-time high of 9%. So in a way, you would think Americans would be feeling better about where things are going. What's kind of in between the lines is, unemployment in certain sectors is pretty low. A lot of six-figure high-paying jobs are gone, have been wiped away. A lot of tech jobs, all the big tech companies have been laying people off. And also, I think in terms of just aggressive increases in wages, we're not seeing wages really move up. And so when you still have inflation, let's say in the high 4s, 5%, and companies aren't increasing wages by that or more, it still doesn't feel like the economy is going in the right direction. Coupled with the fact that you have a lot of sectors that are obviously hampered by these very high interest rates. Number one, starting a new business right now with high interest rates is more expensive than ever. So for someone that maybe 3-4 years ago would have gone and taken a leap of faith and started a business, they're not going to do that right now, because you're looking at high 9s, 10s, 11% rates for business loans, which is a pretty discouraging interest rate to start a new business. And on top of that, the banks are obviously being very conservative, more conservative than they've been in a long time. Banks are they're not giving loans out, even though rates are higher. They're not giving loans out freely. So you have people that, yeah, maybe they're employed, but they're not getting a wage that they feel is can keep up with that cost of living. So that's not great. And that's why you have 65% of Americans feeling not good about the economy. You have very high debt, and it's hard to attain debt at a reasonable rate. So you have people, maybe people that wanted to buy a house, but they see these high interest rates. They're not going to buy a house. So there's a lot of industries around real estate that aren't going to take off until we see rates go down. Now, in terms of the Fed, I don't know why they would raise interest rates one more time when inflation's been going down. It doesn't make any sense. The only thing that makes sense is, and I've said this before, half joking, is the Fed is basically a bunch of sadists, and they want a lot of pain in the economy. And they've, and Powell, I say it half joking because, Powell has said that over a year. He knows these rates are going to cause pain in the economy because it's going to hurt business owners. Business owners are not going to just freely hire right now where they with these high rates, and they don't know where things are going to go in the next 6 to 12 months. Are a lot of the tax cuts going to be taken away depending on who's in office? There's a lot of things happening right now that they're unsure of. So yeah, as much as inflation has gone down, and as much as unemployment seems to be low, the good paying jobs and the increases in wages isn't really there. And so people are still struggling day to day with the high cost of goods, because things are obviously still too expensive and moving in a direction that's more expensive than people can afford. So I don't think the economy is going great. It's sort of a strange recession that we're in, because typical indicators like low unemployment are there, but you still see Americans not really happy with the economy.
Yeah. And I guess the Federal Reserve's argument is that, well, they're trying to engineer what they call a soft landing, where they're trying to basically not hurt the economy too much, while at the same time trying to keep kind of wage inflation or wage growth under control, because they feel like that is what is driving some of this, inflation. They don't want too many people getting jobs. Okay. They actually kind of want to keep unemployment up a little bit. And I was going to ask you about that, but you've already answered my question about, do you think we're actually in a recession? Because a lot of people say, I feel like I'm in a recession. You've already talked about that. Over half of consumers have a high level of concern regarding the economy. 2/3 of consumers still feel as though the country is in an economic recession, and 63% believe it will worsen in the next few months. I mean, again, it seems to me that the average American is still feeling the pain. I mean, you brought up real estate. I mean, if you look at mortgage rates, I mean, it is basically unaffordable to get a house at this point, right? Yeah. And also you have, go ahead.
Yeah, close to 7%,
exactly
6.7% right now. And listen, if home prices had dropped 40 or 50%, where it was, then maybe you're in a right position. But what a lot of people are doing is they're just holding on to that cheap mortgage, which is what they should do, right? They're holding on to that cheap mortgage, and they're basically holding on with dear life, right? I'm going to hold on to this 3% mortgage, and until they can't do anything else. That's the only thing that's the only sort of saving grace for that real estate purchase, is that cheap money. So we need to find more of a common ground there. And the dollar also is going to be affected by this. The dollar has been affected by this, and that's why the BRIC nations have been taught. So the BRIC nations, Brazil, Russia, India, China, South Africa, they're meeting August 22nd, 23rd. It was leaked that they're discussing a digital currency that's backed by gold. Now, what's interesting is it was leaked a few months ago, so everyone's waiting for this meeting. And then a few weeks ago, some of the people in the board of this meeting have said, no, it's not ready. We're not going to this currency. But then I was thinking about it, and of course, they don't want to tell people this currency is coming, even if it is coming, for a number of reasons. One, China and India and Russia are continuing to buy gold, so they need more gold, right? If they're going to back a currency based on gold, so they don't want to drive the price up, so they want to keep it under wraps as long as they can. Two, this will be a very desirable currency.
Yep.
And so they don't want to give people any notice of a currency hitting the market. They want to wait and then just release it. I don't even think they'll announce it. I think it'll just be there. The BRICS have a swap system. So they have a system that they've been working on for a long time where they'll be able to trade within each other very easily with a digital currency. That's been in the works long before this gold-backed currency was being discussed. So they're trying to make transactions easier and smoother between themselves. And obviously Russia and China want to continue to do this because they want to get away from the dollar, and they want to hurt our country in any way that they can. So they're going to continue to do that. So there's a lot of these nations that they have this potential to create their own currency. They'd be in the forefront of it. It'd be a very powerful currency. And it does two things. One, it gives them a currency that they can rely on and trust, unlike the dollar. And two, it hurts our country. So they kind of win in both ways. So this BRICS currency is something that's coming, and it's important, and people need to keep an eye on it. And I know they downplayed it recently, but my guess is that it is a currency that will come to fruition. Maybe not at this meeting, but it is going to happen eventually.
So it sounds to me like you think that maybe this new BRICS currency could be a threat to the US dollar. Absolutely. And how do you see gold playing in that, since the currency is backed by gold, which, I mean, you know, a lot of people, they desire that. They like that. They like something, having something actually backed by something. You know, the US dollar is backed by the full faith and credit of the government, but, you know, a lot of people don't really have much faith in the US government nowadays when it comes to our, you know, fiscal and monetary policy. So like realistically, like what effect do you think this has on gold long term in regards to what we're seeing in prices? And do you think that is actually really, you know, the potential? What do you think the potential is to actually dethrone the dollar? And how should investors kind of think about this in the long term?
Yeah, I mean, I think anything is possible in terms of currencies. I mean, the US dollar became the world's reserve currency in 1944 because Great Britain had a tremendous amount of debt, and they were coming out of World War II. And so if you look at what's happening with us, we're in the middle of kind of a few wars, right? We have tremendous debt. So our economy is sort of mirroring the economy that made us the world's reserve currency. That window, that vacuum that Great Britain allowed, put us in the driver's seat in 1944. So we're going through a lot of the same things. We're, you know, obviously in a war, we're funding Ukraine, and that's very costly for us. And you know, there's other, you know, skirmishes and things happening all over the world that are costing us a tremendous amount of money. So, and our debt's at $32 trillion. So it's not unreasonable that the world wants to go to a new currency. It's not going to happen overnight. And also that currency has to be better. And so the gold back idea would be better. Now there's some issues, you know, who holds the gold? You know, I don't think the world would trust if gold was the holder of the gold. So what country is going to hold that gold that they're using to back that currency, and who's going to audit that gold? You know, these are big fundamental questions, you know, because as the currency grows, they're going to need to continue to acquire more gold, right? So, I mean, that would be the logical step if they're going to expand that currency supply. So there are those things that need to be worked out. Now, it's really not that hard with gold. That's the beauty behind it. After World War II, a lot of the world's gold was held here in the US, in the Bank of New York. Even Germany had a lot of their gold here in New York up until about 4 or 5 years ago. And then they called us and said they wanted most of their gold back because they didn't like what was going on with us financially. So that's to hold gold. There's countries that hold gold for other countries and they use it for trading and bartering. That would be a factor into this currency, but it's not as hard as you think. Once you do a full audit, then they would know exactly how many ounces there are, or whatever denomination they want to use. They'd probably use large, like 100-ounce gold bars, which is what a lot of the COMEX banks use. And they would be able to track it pretty easily. So them flipping on this currency could happen very quickly if they decide to do it.
Yeah. And I think, again, a lot of people are concerned about what that means for the dollar long term and whether or not it'll, actually be dethroned with this new BRICS currency. And I definitely think it's something to watch. Now, one thing I do want to go back to the interest rates real quick, because we've seen gold respond a little bit to the recent interest rate increase. And, we don't know if the Feds are going to continue to increase interest rates. I mean, we've seen the market respond. I think the S&P 500 year to date has been up 20%. So we've kind of seen the market respond in a way that we normally wouldn't necessarily, or you wouldn't think would respond the way it is when it comes to increasing interest rates and tightening, a monetary policy and this cycle that we're going through economically. How do you think that gold is going to respond to the continued increase in interest rate if they continue to do it? Maybe they don't have much room to go, but, I think that, the more it kind of increases, I think people are maybe concerned about, okay, do we still have, some concerns about inflation and what may be gold's place in that?
Yeah, well, gold's been, and I've talked about this a lot, is gold's been hovering in the $1,900 range, broke 2,070. Just specifically in terms of gold prices, if you want to talk about that, I don't think gold has gone on as much of a run as some of the other items that people buy day to day. I mean, you've seen food 30, 40, 50%, depending on the sector, go up percentage wise. We haven't seen that kind of run yet in the gold space. So I feel good about where gold's sitting right now. And I've been saying for a while that gold needs to hold this $2,000 floor, very similar to what happened in 2008 and 2009 when it broke 1,000. That was a pivotal moment, because for many years, people didn't, gold was sitting in the $280, $320 range. From the early 80s all the way to 2001, gold was sitting in that. And then once we sort of, after 9/11, kind of broke things open with super low interest rates and just dumping money on the market, that's when you saw gold really, really take off.
Got it.
And also, a lot of wealth was made and also lost from 2001 until today. A lot of wealth was made and lost from 2001 to 2009. And so I think what it is right now is gold is, the asset that a lot of people are really looking for that safety play. JP Morgan just came out and said that they believe that gold will be a tremendous asset next year. And I think the reason is that when you have an economy that is quite confusing, so even though equities are up right now, the Dow's up, things are up, it doesn't seem to, there's no reason for the Dow or the equity markets to be moving up. Some people believe the Fed has sort of loosened some of the money supply, and they just haven't told anybody about it, that they have kind of released some cash onto the market, which I can't confirm, but that's where a lot of people believe, is that they're releasing some money out there, and that's why the equity markets are moving up. But it doesn't make sense that in this kind of economy in the summer, we're seeing a push in the equity markets when most people that I talk to are trying to get away from equities.
Yeah.
They're divesting. So it seems odd that you see this great push.
Yeah.
Also, a lot of the major companies haven't seen strong growth either. We haven't seen all these great reports. Most of the tech companies, that's why they're laying everybody off, is because they're struggling. You have strikes, obviously, all the Hollywood strikes. All those large corporations are struggling because they don't, writers and actors want to, monetize. But then, if you look at, which I get their position, but if you look at those companies, Netflix and those Disney, those streaming platforms have not been profitable for any of those companies. And so you have this, strike, which is a monumental strike. I mean, we're, thousands of people, and, obviously people, want to get more of a living wage, and it's frustrating, but, if companies aren't doing well, it's not a great time to go in for a strike, when it's been proven that Netflix and Disney and all these platforms are not producing the kind of returns that they thought that they were going to get. And so it's a difficult time for me to understand how the equity markets have continued to move up over the last, 60 days, yet we really haven't seen the typical signs of a strong economy.
Yeah, no, I agree. I think it's a confusing time for investors. I think usually when you see interest rates rise the way they're rising, investors will move towards assets that are less risky, where you're gonna, get, more of a guaranteed return. But that's
Right.
not what we're saying,
That's not what we're seeing. Yeah,
Yeah.
that we're not seeing that at all. I mean, and you're seeing, we had another bank failure last week.
Yeah.
PacWest and California Bank merged together. A lot of regional banks are struggling, to keep up because a lot of their income is based on new loans, and new loans are down. Obviously, residential, they're down almost 80%. So you're going to have some issues. So yeah, so you have all these things happening. Yet you see the equity markets up, and it's sort of doesn't really the smell test. It doesn't really make sense right now, and so I think that's why people are looking at different assets. And one thing I was going to bring up is the thing that I always love talking about is this free money. And we talk about money in different aspects, but there's free money in 401ks right now that people aren't aware. There is almost 30 million old 401k accounts that have been sitting vacant. They did a study, came out May of 2023. There's almost 30 million accounts that people have left at old employers. It's basically just sitting there. And the reason it's bad for these people that leave the money there is, number one, the fees in those 401ks are typically very high. You're looking at anywhere from 1.5% to 3%. It's one thing if you're at an employer and the employer's contributing money, maybe you're putting a little bit in. Okay, it's not the best, but we have fees, tax advantages. But once you leave, now you're not getting any money putting in, right? The employer's not putting money in, and you're getting charged 2 to 3% in fees, and you're not in control. So people that aren't aware of this, there's a lot of free money out there that could be yours. At Noble Gold, we help people. They have accounts. As long as they're above our minimum in an IRA, as long as they're above $10,000, we'll help you navigate that and find those old 401ks. But even if you don't do it with us, if you got an account with $3,000 from, Starbucks, you got to take control of that money, because it will just dwindle away to nothing. And there is, what is it? $1.65 trillion sitting in these accounts total. I mean, we're talking about a lot of money out there that's free. And you can, when I tell people, is like, well, what do I do with this 401k? It's like, well, you can do two things. One, we can help you put it into gold and silver, which, people say, well, you're in the gold and silver business. Of course, you're going to say that. But the reason that I would say that is because when you get that new job and you have a 401k, they're going to put that money in the stock market. So if you have some in gold, the one that you're in control of, the self-directed, and then you got some money in equities at your new employer, you're diversified better than you are currently. So yes, we're in the gold business, and obviously I'm going to say that, but that does make sense. But that being said, even if you didn't do it with us, you should still move it over into a self-directed IRA, take control of that money, and move it into an asset that you're in control of, and to avoid not only them screwing up your account, but two, you just getting charged fees that are unnecessary.
Yeah. And this is what we're saying in the so-called Great Resignation, where, you have a bunch of people quitting their jobs, moving to another job, trying to find, better employment, make more money, and they're leaving their 401ks behind. And this is something I used to talk about all the time when I worked in the financial services industry. People used to always have questions about, how do you roll over your 401k to your IRA? And I'm like, it's really as simple as just giving them a call and saying, hey, this is where I want to send my money. They're going to, send a check to the investment company and it'll roll over. It's not a taxable event. It's called a direct rollover, right? You can, roll it over, and, you can now have it self-directed, and you can avoid those fees that you was talking about, because 401ks, managing 401ks, these corporate accounts, is different than managing an IRA, right? In regards to the cost of the company. So you're going to be paying more money on that 401k, and you can't control it. You don't have the same freedom. So, I think what you're saying in regards to people that have that extra kind of money laying around in their 401k, they don't know what to do with it. Again, when you go to this new job, you're going to get an account that you're going to have limited options in regards to what you can invest in, right? And when, you take that extra money you got laying around and you roll it over to an IRA, that gold, or invested in gold or precious metals, is the instant diversification that you're going to get with that type of rollover. And again, it's a not a taxable event. Okay. Like a lot of people think this is a taxable. It's not a taxable event. It's simply just, you're just rolling over the money into a account that you have more control over.
Yeah. I will tell you about a taxable event that people are doing that you can make a lot of money. It's called a backdoor Roth.
Yeah.
I don't know if you're familiar with that, but that's
very familiar.
Yeah, that's a that's a one way. So basically, a backdoor Roth is let's say you're a high income earner, they won't let you put money into a Roth, but what you do is you fill up your traditional IRA, and then you basically pay the tax and you turn that money into a Roth. And the reason that people do that is because then whatever's left over after you pay the tax, when you take it out at retirement, it's tax free. And if anybody knows anything about a guy named Peter Thiel, the guy that's one of the PayPal Google founders, he had a backdoor Roth that he had in stock, and now he has a $5 billion Roth account, and it's tax free.
Yeah.
So another thing that people do is this backdoor Roth. If you're a high income earner, it's something we can, if you're interested in they can call Noble Gold. We can walk them through the process. Now, we're not giving tax advice, but everything's out there about these things. We're not we're not telling anything that's any kind of trade secret here. About Roth IRAs.
Yeah.
But yeah, you were right. I mean, that's the whole thing is that, and then, at retirement, people say, what do I do with my gold? And what happens a lot of times with our clients that are retiring and they have this in their IRA is if they need the money that year, they'll sell it and go back into cash. But if they don't, a lot of times people will take the coins or the bars and they'll take them at their distribution. They'll take them as their RMD, and they'll hold on to them. And this is one of the few assets that you can actually take out. You own Ford stock, they're not going to send you a stock certificate. They could actually. Theoretically, they could, but I've never seen anyone actually do it. But yeah, they can send you this stuff. They can send you the coins. They can send you the bars that you own in your IRA. And if the dollar's not doing great, or if you don't like any of the other investment options out there and you don't need the money, it's a great thing to do because you just basically take the gold and silver, you hold it. And then later on, if you want to sell it, you call us and we'll buy it back from you. So there's a lot of options in the physical metal space that aren't allowed or sort of can work in the equity markets. And that's why I think diversifying and having some equities. And yeah, everybody feels great finally about their equities now. They're up a little bit. But for the last few years, those accounts were not doing great. And people that had gold and had equities were feeling really good.
Yeah.
Because their gold was moving up and their equities are down. But if they needed money, they'd sell the gold, right? You'd sell the thing that's moving up. So that's the beauty behind having, different assets in your portfolio. And it's something that I do personally. I have gold and silver, I have real estate, I have equities, I have bonds, I have a ton of different things because I know that you never know when you're going to need the money and you got to be diversified.
Yeah.
Okay? And then the last thing I do is I invest in businesses. That's really the last, because that's, for me, the ultimate level of control is starting a new business that I believe in, and watching that come to fruition. And that's another type of alternative asset, obviously much riskier, but I'm comfortable with that level of risk.
Yeah. So again, I appreciate you joining us to talk about the economy, the state of things, how you're looking at things. I definitely think it helps to get an expert opinion to come on and to discuss. And also thank you for talking to us about gold and what, the role gold may play in the future in regards to, your portfolio, the markets, interest rates, BRICS. Okay. Talk about 401k, retirement. And I hope that this conversation was informative and helpful for you guys. And I would just like to thank my friend Colin Plume from Noble Gold for coming on to discuss these financial and economic topics with us. And I hope you guys learned a lot. So with that being said, thank you, Colin. I appreciate you coming on. Any last things you want to say before we go?
No, if anybody wants to get some free information about what we do, they can go to our website at noblegoldinvestments.com, or if they want to just talk to a live person, they can call us at 877-646-5347. You'll talk to a live person here in the US. It can give you a lot of good information, friendly conversation, not a pressure type of phone call, but just, good people. And so if anyone has a question off the top of their mind they want to ask, just call in and we'll send you out the free information and answer any questions that you may have.
Thank you, Colin. I appreciate it. So, guys, just make sure that you, again, like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace. All right, guys. So we have a special edition of the show today. I am joined by my friend Colin Plum from Noble Gold, the CEO of Noble Gold. I love to bring him on the show to discuss the current state of the economy, so that you guys get a better understanding of what's going on with the economy and what to expect moving forward in the future. Okay, we're done.